Hello and welcome to another episode of Stock Shots. Please remember, I am not a financial advisor. I'm just giving my opinion based on some things I see, like support and resistance, supply, demand, and of course, some indicators that may be on the screen. So always do your own due diligence. Make sure you educate yourself and always look to the left because we're looking at things that have already happened to think about what things may do in the future. So this is another episode of Stock Shots. Welcome. Here we go, one of our favorites. Of course, it's the S Fund. All right, so let's keep it real. We have a confirmed break of support, and we have, let's say this, if you go to the DGI ticker, you'll see there was a strong volume break as well. So with this ticker here, the DWCPF, the reason I do it is because it has a lot of correlation with the S Fund, but it does not show volume. So I'll use the DJI and I'll see what the volume is for that. And if I have a strong volume break of resistance or support, I'll go with it. This time there is a strong volume break. And we are probably going to go down at least, let's see, let's make some levels going down. We had some going up. Look for this area here around the 910 to the 1891. 910 to about 1891 for some support going down. Also, is this a crash? The question is this a crash? No one can say, but we do have a lot of fundamental news. So around the world, if you have not noticed, there is another war that may be starting. Iran and Israel may be going to war that will affect your TSP. Okay, especially if this is legitimate and we do go to another war. We're probably going to take a hit for a while. So the other funds is out of style. It's G season, okay? So my money is in the G season, or G fund has been there since last week, and I've been good. I'm not taking no risk. I'm going to wait until I see an area where I have strong bullish resistance or a strong bullish support, and at that time, then I'll do something. But for now, I feel like at this moment, on the technicals, just based on the technicals, we are doing a pullback. So if we follow generally a good upswing in the past, you may come down almost to where you started. So we have a couple areas of demand, 1, 2, and 3. If we have a very strong pullback, we may hit these demand areas and they may show us some support and a bounce up. We still have time for the rest of the year, so that's what I think so far with the S Fund. Let's go to the C Fund. Here's SPX. This one actually has volume. That's why I like to use this one. Let's keep it really, really simple. We hit this area of resistance here. Went above it, couldn't break it. We had strong volume coming down. But remember this candle here, these 3 green candles continue to go up on weaker volume. That was part of what we could say is a clue that we were probably not going to be able to hold this level here at 5201. What happened is we had bad economic news throughout the week showing us that we had higher inflation, and higher inflation is not good for the stock market because what's going to happen is everyone thinks that the Fed will say, we're going to start cutting rates starting on this date. Well, the Fed's like, we ain't cutting rates. Nah, we don't even know we could do it this year. We're supposed to get like 6 rate cuts this year, and everybody was like, buy, because you got to get in before the rate cuts start happening. So that when it takes off, you're already in. Well, now people are thinking, all right, well, if we're not doing 6, we might do 4. If we're not doing 4, we might do 3. We might do 3, we might do 2. No one's really sure what they're going to do now. So these sell-offs can be areas where you can get good price buy-ins for your funds. Let's see. Here. Now, one thing I want to do before I even put these levels in and look, there's something on the SPX daily that you should know about. And it is, it's essentially right what we were looking at. Okay. I want you to look very carefully. There is something here that most likely will be part of a strategy that we are looking to capitalize on, and that is a gap. So we have a gap in the SPX, aka the C fund, and that is from 5,039.46 all the way down to 49.83. The only thing about gaps is you don't know when they're going to get filled. So yes, this is a possibility. Some of the areas that we could be concerned about are right around this area. So I'm looking for it to go there. That means let's do numbers. From here top all the way to at least this. And if we go down to the bottom of the gap, it's that, and then here. Alright, so let's just go to the bottom of the gap. That's 5.3% from the high. We've already covered 2.8%. That's a 2.8% drop in the C fund from our high. That's in the daily. In the weekly, guess what? It's still the same. So we're looking for a bounce most likely through this gap area. As we hit here, we most likely will go back up, and that's only 5%. So it's not like you're losing a lot of money, but let's keep going. All right, let's go to the international fund. International fund, same story. It is G season. All right, the other funds is out of style right now. I'm all about having that G season. So at this point, we have broken through 2 support levels. Are we going to continue? Because if you look, we are also out of our channel. We have strong negative selling pressure. The only thing I'm noticing about all the funds so far is that in our indicator at the bottom, in the weekly time frame, we are still in buy zones. So that is, in my mind, preparing me for a bounce, or telling me that this is a pullback and not a crash. Until I get price action below this area here in my indicator, so below my 50 line, I'm still in a buy zone. So this is needed for me to go further up and test new highs, maybe around the 82. But I have to get a pullback first, because there's probably a lot of orders down here waiting in this area right here. And why do I say this area? Because this is a area of consolidation, order block. There could be a lot of orders that were placed around this area, so all the way down to about 72.26 up to most likely 75.43 around this area. That could be the catalyst for a push up. We also have to wait on fundamental news, because of course this international fund is probably going to take the biggest hit as the news unfolds around the world. So let's take another look at our last fund, the F fund, aggregated bond fund. All right, bonds are saying let's keep going. So if you didn't know this, the bond market can lead the stock market. We are currently going down, down, down with the bond market. All right, it is telling us that I'm done. It has a very strong selling pressure. It's already in a sell zone down here. We are looking at a 1-2 touches, and then it kept going down. So that strong buying pressure we had back over here in December was gone. Right now we have this sell-off. Now we're looking forward to hit support around here at 95. That'll be good. That'll be a nice little pullback. Let's see what that would be for the international fund. From its top down to where it currently is, that'll be a 4.14% drop, where we currently are. And if we continue down to our support, that would be a 4.40%. But let's say it continues down. What you see the worst case scenario may be for a pullback. That's 5.7. Now, if we want to get very technical with it, let's get technical with it. Let's see where we're currently at. And this can help you in case you're wondering, am I in a pullback or am I in a absolute drop? We pull out Fibonacci retracement. Currently, let's get some of this stuff out the way. We are at the 50.50. From October of last year, we want a bull run. If you have a correction, you have to come back down, or a pullback, you have to come back down. Now, this is a very good area to bounce from, technical wise, not fundamentally. Fundamentally, we have a lot of uncertainties, and uncertainty does not go well with the stock market. So at this point, we're at a 5.0. If we go to our favorite, the S fund, let's see where they're at for a fib retracement. I can get rid of this channel here because we are no longer in the channel. So bye, channel. Right now, we're not even at the very top in our fib. So let's see what we got here in SPX. Just get rid of that. Channel. Goodbye, channel. Don't need that. All right. Let's do our fib retracement here. All right, if you look down here, right at that 49.85, that covers that gap area technically. Now, remember, I'm a very big technical trader. I'm not a fundamental trader, but I only have to take fundamentals in when I know it's going to be something big. So uncertainty will give us a reason for a pullback. And right now, we have not even reached a very light pullback. So it does line up for a light pullback to our gap area in those two levels we were talking about, if you use the Fibonacci for some kind of reassurance. And I'm also still in the buy zone down here. So this week, I'm listening to the bears. They're doing their calls. They're on Discord. They're Skyping. They're Zooming. They're talking. They're buying their puts. So I'm going to stay in the G fund until I get a very good push up. So that's me. But do what you want to do. Hopefully you're staying green. Your portfolios are not going in the red too much. And if they do, that's okay. You had a really good run this year so far. So we can make up any losses in the next couple months. All right. See you next week.